Dis nie yes, maar sê vir ons mag. Ek kan
Okay, I'm unmuted. Okay, morning everyone. I see there's lots of people joining still. Can we please give it about 2-3 minutes just so that everyone's got an opportunity to join, and then we'll start with the presentation. Okay. Great. Okay. Morning, everyone. Welcome to the first in many years to a pre-close presentation by ourselves. Maybe that's indicative where we are. We like to give good news, not bad news. At least we've got lots of good news this time around. And we're quite excited about where the business is. Maybe by way of introduction, for those of you who don't know me, my name is Vickers. I represent Calgro Group as well as developments in today's presentation. Across me, there's computers, Wally Hubert. He's our ex-financial director, which we've moved in the last year to our Memorial Parks business, which also I think should indicate to you, if we move some senior resources there in human capital, what growth opportunities and opportunities we see in that business to take that business forward. And then lastly, Siri Naika, she's our financial director. And after myself and Balder gave you a quick introduction to where we see the various businesses, Siri will just touch on a few financial pointers. Maybe just for some administration, we've got a Q&A box. Any questions can be posted in there, and then we'll answer it after our presentation one by one. We're also not going to dissolve any price-sensitive information, and all the information we're talking about today is presentation that is available in the public domain if you look for it, and we're just going to try and summarize a bit and give a bit more clarity on that information. On that note, maybe just to start on a quick thing on Calgro Free Group. The business, as I started with, is in a very good and solid condition. We believe that we really made headway in the last 18 to 24 months to decrease on a consistent basis the net debt position. We've increased our equity position, of course, through profits. I think our profits are way more consistent if you look at the last 6 months of the previous financial year and the first 6 months of this financial year. Of course, I'm not going to guide you too much on where we are currently, but I'll give you some pointers that we gave in the interims. Also, from a creditor's perspective, and on our balance sheet, you'll see it's actually quite clean. From a liability perspective, you've got deferred tax, you've got current tax, you've got creditors, and you've got interest-bearing debt. Interest-bearing debt, I already said, is consistently being driven down on a net basis. Our creditors balance also been cleaned up. Where in the past, there's been lots of deferred liabilities and the like there. It's a lot cleaner. You'll see when the results come out, and you already would have seen that during the interim results. Then what we also focus on is a lot of brand awareness and sales. And maybe on that perspective in both businesses, maybe just to state it explicitly, we are no longer a developer for state. In either our development business or our Memorial Park business, we're a private developer, we're a private operator and developer of Memorial Parks, and that's our core business. By that, I'm not saying that we're not willing to deliver housing for government. but we are willing to deliver housing for government when they've got the desire to do so, as well as the funding. But our core business these days are not a developer for state. It's a private developer. Core markets, if you take it to the residential side, 499,000 to 1.2 million. Our average sales price last year was roughly 600,000 rand. And if you look at your Memorial Park site, your average sales price across the parks, a lot driven by Durbanville and Nasrec, where the volumes are just higher, is roughly 20,000 rand. So that's our core business these days. Maybe just to touch on load shedding quickly. Yes, it is out there. We've learned to work with the business environment in South Africa. I think the challenges of the last, well, now it's about 5 years behind us, but the challenges of the past with a management team that came through that challenges are still all around, is that lessons learned is fairly well imprinted in our minds, but we don't see everything as a stumbling block anymore. The real cost of load shedding for the group is roughly 500,000 rand a month. That's basically this office. We don't have any other satellite office anymore. It's all site-based, but you do end up running generators. If you hand over units to clients, of course, even if there's load shedding, they have to be able to test the light, so then you run generators as well. And the same with our Memorial Parks in terms of our when there's funerals and the like. So it's 6 million a year. Yes, it's a lot of money, but it's costed in, and it is one of those things. But the business is still on a very strong base to move forward from that perspective. The development business, next time I sit here, the 3 will most probably be 4. On the 1st of March, Alistair Langson is taking over the day-to-day operations as managing director from myself. Bit of background on him. He's been with the group now nearly 7 years. So he understands how the group operates. He's been well taught in our way of doing business and the way we look at things. He comes from a family of development where his whole family business is in development in the Eastern Cape in residential housing. So he literally grew up in the trenches and on construction sites, understand the detail. He then went on, well, he first played a bit of semi-professional rugby, but he then went on to study law. He's a qualified lawyer. And prior to working at us, he worked for the biggest residential fund and high-level developer investor in South Africa, International Housing Solutions. They're by far bigger than the rest. So he's got a lot of that experience as well. And as I say, for the last nearly 7 years, well entrenched in the Calgary way of doing things. The ability of that will open up is to give me a bit more time to look at the group strategically, to also assist Baldi a little bit more because we see huge growth opportunities in Memorial Parks, and to look a lot more at detailed capital allocation, the correct capital to the right project, the right yield at the time, as well as how do we drive the completion of the sale of the non-core assets so that every asset on balance sheet can really be worked hard. A lot of those deals, as we reported in the interims, are now close to becoming to a close and should generate quite a bit of capital in the next 12 months. And then the question is, how do we invest that capital? Bit more detail on the development business quickly. Development business today have 9 projects in the ground, one of them being the project in KZN, which we said we're exiting. The units have been completed, and all of that money plus transfer should happen in the next few weeks. So that's 356 units. The last property in KZN are going on auction later this month, but we've got a lot of interest, and then that exit is also fully concluded. Then we've got 8 projects across Gauteng as well as the Western Cape. So a lot lesser projects, but with a wide product range. We can decide very late in the cycle who we build for. So yes, start to fully subsidized. If government's got the desire and the ability to roll out these projects, there's still opportunity. But our core market is basically from 499 to 1.2 million sales of houses. Maybe touch on the consumer health in that market. I can say at this stage we're seeing, and maybe touch wood, we have not seen any drop off in sales, which are very exciting to us. We do, however, monitor it on a weekly basis. It's something we didn't expect, so I'll be clear on that. But it's very good to see that the banks understand and appreciate their role in giving end user bonds to the clients and assisting with the housing rollout and the housing shortage in South Africa. So at this stage, as I say, no decrease in sales. In fact, our conversion rates have also not decreased. That show that the consumer as a general in our core market is financially fairly stable. The bit of excitement may be there. We believe that if we see a decrease, that I think now Absa and Investec is publicly forecast towards the end of the year, interest rate decrease, That might be a bonus. We're not banking on that, but it will be a bonus at the time. At the interim results, we had 1,193 units handed over in the first 6 months and 3,965 under construction, of which we said that we believe roughly half will be handed over during the second 6 months. Read into that what you want, but what you can also then assume from that statement is that if that statement is still true, that, well, if that statement is still in place, that we're also rolling over roughly half of that to the next financial year, and that is either completed or very close to completion, so creating a very solid base for the next year's growth as well. For the next year, our Frankenwald project is definitely going to come on stream. We received our urban development framework approval. Now it's only the final town planning approval, and where normally we do town planning approval on a phased approach on these projects, Frankenwald, because of the nature and the joint venture, all town planning will be approved for the whole project all at once, which will create a lot of balance sheet value, and we'll start with infrastructure towards the latter part of the year. We'll also do a lot of internal infrastructure across our other projects during the year to make sure that we've got a sustainable runway to continue to grow the business from and to capitalize on the market demand. And the benefit is it's not long-term bulk and link infrastructure. It's on Fleurhof, Southfields and Bellar mostly, where it's literally internal infrastructure to create stands for the next 12 to 18 months through the development. And I think that's in a nutshell everything from me in summary. Waldy, Memorial Parks.
Thanks, Wikus. Good morning, everyone. From Memorial Parks perspective, Memorial Parks, as Wikus mentioned, remains a very large strategic expansion area for the group. I think for those people new to the Calgro story, or maybe that haven't joined us previously, maybe just to recap where Memorial Parks comes from and the purpose that it serves within the group. So looking at the development business, by its very nature, it's very cyclical. It's got periods where you generate a lot of cash, and then naturally there's periods where you utilize a lot of cash. And we were looking for a way in which to create a stable stream of income, free cash flow to this business, sort of on a monthly basis to counter effect these big peaks and troughs that come out of your development business. And Memorial Parks, by its very nature, is exactly that. It's a fairly consistent stream of income. It's got that annuity flavor to it. And that's really the purpose that it serves. So our medium to long-term goal with the Memorial Parks business is to grow the free cash flow that we generate from it to the point that it covers group overheads and the group interest expense. Now that makes Calgro very defensive once we get there, because then all of your inverted commas discretionary spending will essentially be taken care of on a monthly basis, and you've got the freedom to focus on your residential developments and the development of units and the rollout thereof. So most of our targets are to grow that annuity flavor, and you'll see that with the new product that we've implemented, which I'll touch on now, that's really the driver for us. The second goal of Memorial Parks is really, and this is maybe a bit of a new one, is to be the hub where we test and battle test new technology and digitization drives that we have within the group. So we roll it out to Memorial Parks first, we go and test it there, we break it there, and then once it works and everything is fine, we bring it back to the development business, because the impact on your Memorial Parks business is just so much smaller in the broader context of the group. Something had to go wrong than testing something coldly on the development side of things. So one of the things we focused on, obviously, is where does our market sit? And our greatest opportunity for marketing our Memorial Parks products still remains when somebody has visited one of our parks. Looking at a lot of data, we've done a lot of data analytics over the last 6 months, and looking at that data, somebody that's either buried a loved one at the park, has either been referred by someone that's done so, and or has attended a funeral. Those are by far the biggest hit rates in terms of conversion. So we have subsequently pivoted our marketing strategy to focus specifically towards that market, broader brand awareness, widening our reach, and making sure that we capture as many as possible of these burials. And then from there, you can start going into pre-sales. Now, the largest barrier, or the biggest barrier to entry to our Memorial Parks business, is still affordability. I think as with most luxury products in South Africa. So we have introduced a new lay-by offering sort of around August last year. Now, this lay-by offering is not really a new product. It was just branded differently, and we've always had it. It was called debit orders previously, so we ran debit orders across accounts, came with its own challenges, and we've gone through new payment gateways and new platforms to re-enable it. And I must say, it's actually been fairly successful to date. I think so. We can disclose that in the period from August up until now, we've done about 10 million rand worth of lay-by sales. Now, the reason why I can just throw the number around is because it's not included in sales. It's extremely important to remember that. We only account for something in sales once it is fully paid off. Now, what that does do is we allowing people anywhere between 3 months and 24 months to pay for that grave. So that 10 million rand, roughly, if you look at the average periods, generates about 600,000 rand a month in stable income. Now, once that starts gaining traction and you start adding up another 12 months or another 18 months onto that, that number can very easily become 1 million, 1.5 million, 2 million. And that starts making a material difference in the broader group, because that takes care of 25 to 40% of your interest bill of the group, making the group a lot more defensive. So that's one of the focus areas for us. And then we're obviously working on 1 or 2 other products to enhance affordability more. And I think once we've got something concrete, we'll obviously bring it back to market and inform everyone of it. I think just to touch on load shedding, I think Memorial Parks, as a general rule, the business is built tough. It's built for the South African environment. So you can throw COVID at it and it does fairly well, and you can throw load shedding at it and it still does fairly well. So just to touch on what Vic has said, impact is really minimal. We dig our graves by hand and all with mechanical TLB. So there's absolutely no impact there whatsoever. It's purely from an office perspective, and all of those offices have got generators running. So the cost impact is really minimal, especially considering the size of those offices, which are small. And I think then maybe just to finish off, I think the one thing to keep in the back of your minds is, and as we've reported in our August numbers, that Memorial Parks does track lower this year from an overall performance perspective. In your 2022 financial year, we still had 1.5 odd waves of COVID in there, which was really beneficial to the group in hindsight. I think tracking the COVID burials, we didn't have as many COVID burials, but excess deaths, it's very clear now that the excess deaths gave the business quite a bit of a tailwind. So just keep that in mind. I cannot ever report that things have started normalizing and the sales are back on track in comparison to the second half of the 2022 financial year. So overall, we're very excited about this business. We still think there's a lot to be done and a lot of opportunities for us. All right, I'm going to hand over to Siri.
Thanks, Valdi. Good morning, everyone. So just from a financial perspective, I think Vickers has mentioned that the group is performing very well. From our half-year results, we have mentioned that the financial statement of financial position is very strong, and it remains quite strong as a result of the construction activities as well as the investments in our infrastructure, which we continuously are doing. In light of this, we do anticipate that we will be achieving our net debt to equity target of 0.8 to 1 at the end of February 2023, whilst we continue focusing on capital allocation as well as amongst our segments and our projects. Our capital spread between risk capital, working capital, and new opportunities is continually reassessed by the group and is in line with our short to medium term goals. We remain within our blended gross margin range of the 20 to 25%, which we have mentioned in previous results presentations, while we ensuring diversification across both the projects, provinces, and also our client base, just to ensure that there's no aggregation risk across the group. And then finally, I just want to mention that cost containment does remain to still be quite an area of focus for the group, with increasing input cost pressures. Our contracts are fixed cost contracts, and we do negotiate that quite early on in our cycle, just to make sure that we do take that into consideration in the forecasting on our projects. So yeah, I think we can take any questions now.
So there's a Q&A tab which you're more than welcome to post any questions to, and I'll just read them out loud and then we can answer them. Currently, we don't have any questions, so currently it's an easy round.
Easy round. Yeah, maybe just from our side to add to a few things. So as Siri said, we definitely tend to be ahead of our net debt to equity targets as at end of February. To Waldy's point, Memorial Parks, as in the first 6 months might be down, but it's at this stage immaterial in the bigger group number set. And as you said, it's busy picking up towards tracking much better towards the previous 6 months. And that's just indication of how our marketing strategy and again, having a lot more senior capacity in that business is playing out. And then from my side, maybe just to add lastly, something I left out earlier, for us as a group, it's still very important not only to trace the attractive financial targets, but we're still level 1 empowerment contributor. And also very important, we are now 44% women across the group. And the driver there is to become 50% women across the group, which I think is very important that we're not only looking at Calgro, but also looking at making a difference in the broader South African economic context, as well as through that, building legacies, changing lives, not only on the ground for our clients, but also creating true value across all sectors from a shareholder's perspective and the employment perspective.
And we've got a first question. It says, can we expect dividends soon?
So I'm going to say what I said in the interim results presentation. I don't believe it's, I think once you look at dividends, you must look at dividends as well as share buybacks. If you look at the current share price, we believe that share buyback is a bigger accretive tool for shareholders, but I think it goes hand on hand to follow with dividends. So maybe not in the next 12 months, but it's definitely something that's actively considered. We previously, years ago, made the statement that it doesn't exist in my vocabulary, and maybe being a shareholder myself and going through the long and deep cycle, I think shareholders would like to see a cash return as well. So it's definitely not that far away.
Next question. Any problems with the construction mafia in various geographies causing disruptions?
Currently none. So it's something we keep a very watching eye on. I see there's a lot of negative press on Western Cape. Now again, touch wood, in our Western Cape projects. Remember, we had the challenges in Scottsdene and we invested a lot of effort and money, of course, to build good relationships with the communities, sponsor sports teams, community facilities, a lot of training programs and upliftment in the local communities. So at this stage, no issues across any of our sites, including with KZN, which we should transfer in the next few weeks.
All right then. How are the debt funders continuing appetites to keep funding the group? What risk points are those discussions touching on?
Yeah, so at this point, I think we can actually raise a lot of debt from appetite. We don't necessarily want to raise a lot of debt. Will we, however, refinance the debt that comes up for maturity in the next 12 months? Yes, we will, because we believe that we're at a point where the debt levels have stabilized. The profit generation, if you refer to the previous 12 months, as well as the interim results for this year, is good. So the equity balance keep growing. So if we can keep debt at stable levels, the net debt over time will come down, continue to come down considerably in terms of equity and as well as your cash resources. But there's not a shortage of debt. In fact, we can raise literally hundreds of millions at this point in time. Maybe on the questions and the risk profile, I believe the debt providers have become a lot more comfortable in us as a team, as well as sustainability of the business through bad cycles or downturning cycles. And I think everyone is seeing the benefit that we currently have within the sector and the value for money offering where our sales are holding up. We track all the banks on a monthly basis, how many bonds they do give to other developers plus ourselves. For our bond originators, better bond, and just remember there's only 3 bond origination licenses in South Africa. Everyone else is white collar branded, like a lot of the insurance companies. So we can have a lot of data through that. And where a lot of people are down, we actually very stable, which just showed that. And I think the debt providers are appreciating that.
Right. Then strategically, do you plan to have a 50-50 split in earnings per share per half going forward?
I'll answer it differently. 1,193 units handed over in the first 6 months, 1,365 units under construction, which we said roughly. So even if you take a haircut of roughly, because roughly doesn't mean exactly half, I think that should be an indication of where we expect it to be.
What's your views on the share price? It seems to be underperforming relative to the business performance.
Share price got a big overhang in shares of investors that untangled through one of our investors' funds, and it doesn't necessarily fit the investment mandate. It's some of our US investors. So there's a big overhang in shares, and we believe that's why the share price is not tracking the business performance. But that also in itself gives opportunity for investment, not only by shareholders, but also by the company.
Right. Then what running, building materials inflation are you experiencing on projects? Any particular shortage of products needed?
There was a shortage throughout the year. Again, these days we plan on various shortages, so we try and build it in. So through the challenges we had to the harbours, there was a definite shortage. We do import our taps and sanitary ware just because literally we cannot get to 50% of the price. We cannot get to a double price, even if you buy or source locally. So there was a shortage, it is resolved, and currently we're not experiencing any shortages. Price inflation, remember we fix our prices for 12 to 18 months on the current projects. We are currently appointing new contracts for the new year, and the price inflation, material and labor, we're busy with the split, so I cannot answer you. Hopefully in the next 4 to 8 weeks, I can give a more detailed answer once our quantity surveyor has been through the detail, as we're seeing a roughly somewhere between a 5.5% and a 6% price increase combined.
There's an update on Frankenwald.
Yeah, so Frankenwald, the option needs to be exercised on the 24th of June this year. We first want town planning approval so that we know there's a lot of value uplift through that. There is an option to extend that with a further option fee. Just remember how the option fees work. The option fee between ourselves and Eris, which are partners in that project, is 10 million a year. So every 6 months you extend it by 5 million rand. And then we carry half of that cost. I'm right in the numbers, eh? Yeah, okay. So our cost will be 2.5 million to extend it for 6 months, a capital basis. If we don't have town planning approval by then, we will extend it. But we do hope to have the town planning approval roughly at that point, and then hope to be in the ground to Balkan Link infrastructure from our own cash resources, no additional funding required, towards roughly, I reckon, end of October towards November.
Can you share with us the number of shares that's been sitting in the overhang?
Yes, actually, guys, I'm not sure I am allowed to. Can I find out if I'm allowed to disclose that and come back to you? I'm actually not sure. So it might be. We can see you also, question.
Yeah.
Okay, Rob, I'll come back to you. Let me just double check that. I'm sure if you speak to either your trading desk at Ashburton or RMB or Investec, they'll be able to also guide you in that.
Don't see any more questions unless I missed something. I didn't. Anyone else for questions? I think we've covered everything.
There's one hand. You see who the hand is?
No, you can't. This is investor.
Yeah, anonymous.
Okay. We can't unmute the mic. Yeah. Yeah, so whoever hand it is, this is set up that we can't unmute you. So please just post your question in the Q&A.
There's a question from Keith. Please also let me know the number of shares in the Riskowitz overhang.
Same question.
Same question.
Okay.
We'll let you know if you keep it up.
In line, just remember it's no longer in the Riskowitz. So we've untangled that shareholding prior to all the challenges they had roughly 12 months ago, but I think the execution was only roughly February, March last year. Yeah, but they're untangled. There was what's it filing? You know, there was a TRP filing, Keith, which I'll sense So there was, at the time, memory serves me well, roughly 11.5 million shares transferred to MIT, March last year. Then roughly the same number of shares to Notre Dame, and roughly, if I remember, somewhere between 6 and 7 million shares to Sequoia. So that was what was transferred. Those shareholding have decreased over the last year. So that's, again, anyone looking at the share register. So if I may ask, I say, let me find out, then I'll distribute it. Otherwise, just refer to the bank's trading desk. So I'll also be able to give it to you. Another question?
Last questions.
Okay. There's no other questions just from my side in closure. Yeah, I think for the first in a very long time, the business has now been in a very solid base for a period of time. The business is very consistent in terms of unit deliveries. The business is very consistent in terms of even sales in our Memorial Park business. And what's quite nice is now that we resolved a better marketing strategy for the last 3, 4, 5 months, which Waldy's been in charge of his team, we've seen it picks up on a consistent basis. It's not cyclical in that, which we think is very, even coming through the winter months. So we're very excited about that. There's a very solid balance sheet. Sales are holding up, even though the interest rates are up. We actually expect a bit of a further uptick towards the end of the year as a bonus. There's a lot of units under construction that sold and built. So cash generation, we expect to remain very positive for quite some time to come. And we expect the growth to come from the space we created. So I think on an overall basis, the business is a very, not maybe shooting the lights out in terms of reckless growth, again, lessons learned, but very solid, consistent growth. We've seen in the last 3 years, and we believe you'll continue to see it in the foreseeable future. No further questions? I think on behalf of myself, Waldy and Siri, thank you for your time. Thanks for the interest in Calgro. As always, if you have any further questions, please, most of you have Chris, which manages our public relations contact details. Otherwise, myself is just vickers@calgreenfree.com, Waldy@calgreenfree.com, or Sahuri@calgreenfree.com. So you're welcome to email us direct as well, and we'll respond to your questions. I personally are generally quite bad on emails. I'm just doing a lot of traveling and running around. That hopefully will slow down from the end of the month. But just give me 2 or 3 days to respond to you, but I will. Thank you. Appreciate it. Have a good day.
Thanks, everyone. Thanks,